Vanguard provides some of the most popular lowest cost ETFs out there. In this video, we'll look at 7 of the best Vanguard ETFs. First is VOO or VOO, the Vanguard S&P 500 ETF. VOO is Vanguard's ETF to track the famous S&P 500 index, comprised of the 500 largest profitable publicly traded companies in the United States. The S&P 500 index is a proxy for what we call the market. This ETF gets you well diversified across US large cap stocks. These are household names like Johnson & Johnson, Microsoft, and Coca-Cola. VOO has an expense ratio of 0.03%. Next up is VTI, the Vanguard Total Stock Market ETF. VTI goes a bit further than VOO and adds in smaller companies that we refer to as small caps and mid caps. At market cap weights, these smaller companies comprise about 20% of the entire investable US stock market. That is, roughly 80% of VTI is VOO. In that sense, we'd say VTI is more diversified with about 3,500 stocks via the crisp US Total Market Index. VTI has a fee of 0.03%. Next on the list is VXUS, the Vanguard Total International Stock ETF. VOO and VTI only cover US stocks, and the US is one single country out of nearly 200 in the world. VXUS provides exposure to global stocks outside the United States, which we call the Total International Stock Market. Doing so enhances the portfolio's diversification, meaning a lower risk profile. This ETF gets you exposure to companies like Nestle, Samsung, and Toyota. VXUS seeks to track the FTSE Global All Cap XUS Index and has nearly 8,000 holdings and an expense ratio of 0.07%. Number 4 on the list is VT, the Vanguard Total World Stock ETF. We can go one step further and simply combine the previous two funds to capture the entire global stock market via Vanguard's Total World Stock ETF, which gets you fully diversified globally in stocks in one fell swoop. You can brag to your friends that you own over 9,000 stocks in your portfolio. VT seeks to track the FTSE Global All Cap Index and has a fee of 0.07%. Next up is BND, the Vanguard Total Bond Market ETF. Keep in mind that stocks are only one asset class. Bonds, also called fixed income, are typically the first diversifier of choice to diversify across asset types. BND allows investors to capture the total US bond market, capturing both government bonds and corporate bonds. Alongside VTI and VXUS, BND rounds out the popular Bogleheads 3-fund portfolio. BND seeks to track the Bloomberg US Aggregate Float Adjusted Index and has an expense ratio of 0.03%. Vanguard also has a Total International Bond Market ETF, which is BNDX. BNDX seeks to track the Bloomberg Global Aggregate XUSD Float Adjusted RIC Capped Index and has an expense ratio of 0.07%. Last on our list is BNDW, the Vanguard Total World Bond ETF. Just like we did earlier with stocks, for the investor who wants to simplify and use a single fund for a global scope, BNDW is the total world bond market. BNDW seeks to track the Bloomberg Global Aggregate Float Adjusted Composite Index and has an expense ratio of 0.05%. To learn how to use a few of these funds to build the popular Bogleheads 3-fund portfolio, click this video here. Do you own any of these Vanguard ETFs? Let me know in the comments. Thanks for watching.